11:35 on a Big Show clock. Brought to you now by the Iowa Ag Water Alliance. Clean water in Iowa starts here. You bet it does. No matter where you're at, clean water in Iowa starts with you. Iowa Ag Water Alliance. Check out their website, and you will see many different projects going on and programs available to help you edge some things in your operation that might, or add some things, I should say, in your operation that will add to clean water all across the state of Iowa. That's the goal, Iowa Ag Water Alliance. Clean Water Wednesday tomorrow, by the way. I believe Evan Brain's going to be joining us. Now, don't go filling up his inbox today and calling him and telling him, oh, boy, you're going to be on the Big Show tomorrow. He'll be on with us tomorrow during the Big Show. Evan's a great guy, works over in East Central Iowa, one of our agronomists that we talk to about clean water projects going on. He'll be with us tomorrow. Right now, we're starting off with a look at the marketplace. Brian Hoops, Midwest Market Solutions, with us. Brian, last few times we've been on, you have made a request that next time you call, could you make it on an up market day? Well, I checked in with the Merc yesterday, and I told him, I said, I'm thinking about having Brian Hoops on. Could you guys help me out a little bit? And here we go with 10 to 12 to 13 cents higher in soybeans. So your name carries a lot of weight. And one way or another, we are moving a little bit higher today.
Yes, we are. Good to see some green on our screens. I think we're kind of getting past the point in the grains where we've absorbed a lot of the tariff news from a negative standpoint, and now we're starting to hear 53 countries are willing to talk and make some sort of agreement with the White House so that they don't have to pay these tariffs. So we're seeing actually a positive effect. We're starting to see the grain markets react to this, especially the corn market. Very little of our corn is actually exported. About 15% is actually sold. The rest of it is ethanol usage here in the United States, or it's consumed by livestock here in the United States. And that 15%, the vast majority, ends up going to Mexico, which is wanting to reach an agreement with the U.S. so that we can have no tariffs on what they import from the U.S. So the corn market is probably the first one to show any type of independent strength and rally. We're starting to see wheat market find a little bit of legs, so even soybeans, which are a little bit more subject to the tariffs because we export about 42% of our soybean crop. That one is starting to find some legs and start to move higher as well. So, it's not the end of the world here. And we've seen conflicting reports today. Fox Business is talking about 104% tariff on Chinese imports starting tomorrow. We've seen some, I think, reliable sources say those actually went in effect today at 11 o'clock because China has not removed their tariffs. That's where the biggest trade war still lies. China has not bought any soybeans, not bought any corn. They're not going to buy anything from the U.S. anyway until maybe August or September. So there's plenty of time for this to be worked out without really having any detrimental effects to our export markets, our export profiles. I think the markets are kind of absorbing that news now and coming to that realization that this could be a little short-term negative, but really a long-term positive for the U.S. farmer.
Well, you mentioned soybeans from China and South America. It's no surprise here to our Big Show listeners anyway that South America is the leading producer of soybeans in the world. They're about done harvest-wise, aren't they?
Yeah, they're getting really close to getting completed with their harvest. Still ongoing in Argentina here. Corn harvest is only 17% done in Argentina. They haven't really done much in the way of soybeans, but Brazil's soybean harvest is about 87% done, and their first corn harvest is about 2/3 of the way done. So, they're done with their big corn crop being seeded. That's subject to some weather issues. If it gets real dry in Safrina, you can really expect to see U.S. corn exports improve quite a bit, and I think U.S. corn values would rally significantly if that does in fact happen.
Let's talk a little bit about livestock here, and I'm looking at the cattle market. We're seeing a little bit of a turn, but boy, cattle took a beating here. Yesterday again?
Yeah, they really seem to be following exactly what the stock market is going to do. And, we were sharply higher at one point in the stock market early in the morning hours, overnight into the morning hours. up until about 9 o'clock, and that produced a strong opening in the cattle. We were up, 300 points in the live cattle, 400 in feeders. Stock market has backed off about 170 points. S&P futures 170 points off of its highs of the morning. We're still barely higher on the day, but as that stock market is weakened, you can see some red on the screens of the cattle futures. Now they're starting to weaken as well. Just a mirror image of what happens in that stock market is happening in cattle. Not much concern about the cash markets except for the April futures contracts, but it's all tied to sentiment that if the stock market's down, maybe the consumer doesn't spend as much on beef, and that's what we're seeing, I think, as a reason why the cattle market is starting to back off its highs here, because midday cutouts were higher.
So what do you think we're going to see for cash cattle this week?
Well, I think we're going to be lower, maybe steady at best case scenario, but probably $1 to $2 softer. It's 208 in the Southern Plains is kind of the benchmark. Probably going to see 205, 206. But that still leaves April futures discount, and they should narrow that discount by, at least remaining steady, if not trading higher.
Well, Brian, we're going to let you go for an hour and 10 minutes and give you a call back, and at that time, we want to maybe get some targets moving forward and some strategy for corn and soybeans. So in the meantime, how can we find out more about what you're doing there with your folks all across the country? By the way, you have offices from, the Dakotas all the way down through Missouri.
Right, 5 different states, Minnesota, Iowa, North and South Dakota, as well as Missouri. So it's, I guess, where our name, Midwest Markets Solutions, comes from. Yeah, you can find us on the web at MidwestMarketSolutions.com. We have Twitter feed and text message services as well as newsletters, so you can go to our website and sign up for all of that. And if you have any questions, you can always call me at 417-501-5132.
All right, Brian, thanks a lot. Brian Hoops, check in with you again in an hour and 10 minutes from right now. Brian with Midwest Market Solutions, starting it off with a look at what's going on in the marketplace.
This is The Big Show.
12:55 here on the Big Show clock, moving towards market close here in about, half hour or so. Brian Hoops with us on the telephone line, Midwest Market Solutions. Brian, soybeans seem to be holding their gains for the day. What's pushing this market higher?
Yeah, we've held pretty good gains, Bob, here in the mid-session, despite the fact that the stock market has really come off of its highs. And sometimes that'll produce some selling, some outside market influences will just produce selling as margin call type selling. And it's really affected the cattle market, but beans have held in there very well. There's a lot of talk that China has been an active buyer of soybeans from Brazil. Anywhere from 10 to 15 cargoes is what's been rumored. That they are buying massive quantities out of South America. Brazil did post yesterday that their March exports were an all-time record high, beating their sales from 2023. So they're cranking up the business there. Their harvest is wrapping up, as we talked in the first segment, and they're going to continue to be a big shipper of soybeans. And of course, Argentina's soybean harvest is just right around the corner, and they should be pretty aggressive sellers as well.
So what are we looking at here? December corn contract, November soybeans over the next couple of weeks?
Well, I think, as we turn our attention towards U.S. planting, we know the U.S. farmer is going to plant a lot of acres of corn. 95.4, I think, is what the USDA said at our March report. It could end up being higher than that based off of weather conditions and price. Soybeans had that plunge the other day where they dropped 35 cents and have not really recovered much. So they're still below $10 on the futures on November beans. Getting back to $10 is probably going to be a little bit of a struggle, but they really need to go back to $10 or $10.20, $10.25 in an effort to buy back some of the acres that is being lost to the corn planter. And maybe even to some other small grains. But soybeans at this price level, you're looking at a much, much cheaper price compared to their spring insurance guarantees, and that is going to prohibit a lot of soybeans to be put in the ground. We were $11.55 crop insurance guarantee last year, $10.54 this year. Corn is actually higher than a year ago at $4.70. So there's I think a little bit better incentive to plant the corn crop this year than the soybeans, but corn probably will struggle, in the $4.50 455 to 465 range, I would say, for December corn. It's probably going to be a struggle to get much above that area unless there's adverse weather.
Now let's talk a little bit about what's going on in the cattle market, because we have been watching it closely as well. Live cattle, everyone's kind of leaning towards being a little bit lower this week. What do you think?
I think the cash markets will be. Now, the futures should try and recover, especially the April contract, because we're so discount to the cash. Cash was 208 as a benchmark last week in the Southern Plains. We're trading 199 on the board, so that's a big discount. Even if the futures come down or the cash comes down a couple dollars, the futures need to come up and kind of meet against that price level. So I would look for futures to gain, cash to be a little bit softer here, but we are really dependent upon what happens in the stock market. We're 200 points off of our highs in the S&Ps from this morning, and the cattle market is several dollars off their highs as well.
Brian, how can we find out more about Midwest Market Solutions?
You can go to our website, MidwestMarketSolutions.com. You can give me a call also, 417-501-5132.
Thanks, Brian. Brian Hoops with us,
Thanks.
Midwest Market Solutions. Nathan closes the markets out in a half hour.